right, so welcome back to Multifamily Live. We have a repeat guest on the show today, Emir Dukic. Hey, Emir, how you doing?
Hey, Jason, glad to be back.
Glad to have you. And so it's now time number 3. There's been a lot of time in between the last time we spoke. Of course, pre-COVID would put it that. But a little bit about Emir is he is the CEO and founder of Rabbu, an up-and-coming startup based here in the QC that speaks to one of the world's most popular conversations these days, the shared economy. Dukic and his team are working to create a new experience in the space. And Rabbu specifically is a boutique property rental brand that offers guests to the Charlotte area accommodations with high levels of personalization and standardization, which is a word that I probably need to say about 50 times to get it once right. But Emir, welcome back. Talk to us, man. What have you been up to and what's been happening over the course of now over a year of different rental patterns I'm sure you've been seeing out there?
Yeah, absolutely. Glad to be back. And yeah, I mean, man, that description you just had just kind of takes me back to where things used to be. The company has evolved since last we spoke. We are actually transformed a little bit to be more of a platform that helps your listeners or property investors identify short-term rentals as an asset class. So we've taken a step back from ourselves of actually creating a short-term rental brand as we've been approached by more property investors who want to get in this space and have transitioned to be more of an asset management platform where we help property investors understand the short-term rental asset class, midterm rentals, and how they can best capitalize revenue in that space. So, we've made a little bit of a transformation, and that's because we've seen the demand for this space explode even through COVID. It's been quite a year.
How has it changed now with the demand? Has it basically just there was a pause for a moment and just went back to status quo, or have you seen a shift in the way that demand has happened across different types of short-term rentals?
I think it's been an evolution. So, to take you back to March of last year, I think it was right around St. Patrick's Day, where, COVID really became real in the United States, where, we started seeing the stock market plummet and the lockdown start to take effect. So what happened on our end or in the short-term rental world is Airbnb said, hey, guys, we understand that nobody should be traveling. We're going to allow anybody to cancel and get a full refund on their traditional stay. So what should have been peak seasonality for us, peak revenue months, April, May, June into the summer, all of a sudden were wiped clean. And rightfully so. It was not the right time to travel in the late spring, early summer of last year. So what we decided to do with our product, again, fully furnished homes, primarily single family, but a lot of multifamily, was to start offer those homes as midterm rentals. So rentals for 14 plus day stays. And we were hoping just to utilize, that strategy to help our investors that we work with capture some revenue on their portfolio. But next thing we knew, we had record occupancies, and we started seeing people migrate into these homes because they gave them more privacy and more space. So we saw a lot of people. Our homes are primarily in the Southeast. We saw a lot of people move down from the north, from New York, and from other states up north to the south and live in larger homes. And the way they would initially do that is by staying in a short-term rental. We started kind of the term midterm rentals because what COVID had done, while obviously a terrible pandemic, it had accelerated one piece of the way we live and work, and that's the remote work aspect. So people were no longer tied to living in the area where they lived. To work in there where they lived. So they decided to move elsewhere where the quality of life was better. So we saw a migration of people coming down south to the southeast and looking to rent short-term rentals, Airbnbs for multiple weeks at a time so that they can, live more comfortably than they could, for example, nothing against New York, but in a small New York apartment, right? So what really happened as a result of COVID, people realized they can work from anywhere and that they were not tied to a geographic location. And a need emerged for furnished rental homes. And that's where, the short-term rentals, the Airbnbs were able to supply a supply product that met this demand.
So with that said, have you now pushed further into the midterm rental market with acquiring assets specifically term for that? Or are you now seeing there's a transition back to the shorter, average 1, 2, 3 day turnaround times?
Yeah, it's interesting. It's becoming more market specific. We have definitely seen a large influx of properties being used for midterm rentals. Probably closer to your traditional corporate stays, but the clients aren't just corporate brands, aren't just companies. They're everyday people. But in certain markets, in vacation markets, for example, we've actually seen a return for short-term rental demand, and that's because short-term rentals are more COVID friendly and social distance friendly than your traditional hotel would be, right? Because you have a full home to yourself and you can keep social distance, and you don't have to worry about being in a hotel room with 300 rooms with people from 300 different locations potentially carrying the disease. So really, this type of product became much more popular as people travel slowed down, but it didn't necessarily stop. And it became more drive to destination travel versus fly to destination travel. So people started driving to places and looking for full homes through Airbnbs and short-term rentals to stay there. So it really became a mixture of either people are coming and utilizing our product for multiple weeks to multiple months at a time, to people utilizing our product for a few days because it was more, they wanted to travel still, and this was deemed a more safe option to do
What
so.
was typically the occupancy rates you would see across properties pre-COVID to where you're seeing it now with a slightly change in model?
Yeah, so it's interesting. So pre-COVID, it'd be considered a good property to have about a 65 to 70% occupancy. That really means that you're kind of optimizing for your daily rate and for the occupancy. What you want to do is you don't want to undercharge and have 100% occupancy. You really want to be in the 65 to 75% sweet spot. And once COVID hit, we priced pretty aggressively and found ourselves at 92% occupied, which made us realize, just one, it was great because we were able to generate revenue during a time when hotels were down significantly, but it also kind of showed us that we probably priced too aggressively, that the demand is there and that we could have lowered the price point and still, increased the price point and still seen some good occupancy. So it's been really a shift towards from 65% occupancy. Now we're in the 70% range because we're still trying to figure out with COVID what the best mixture is. But the demand is certainly there. We still manage doors under our portfolio. We have close to 150 now, and we are fully occupied on the weekends again. And that's a mixture of monthly stays and daily and weekly stays. So it's been a really interesting 12 months, to say the least.
Has now, of course, you talked about a lot of cities, of course, having people moving out to larger homes that are outside the cities. How are you now identifying new properties to help potentially your clients you work with find new ones for their portfolio?
Yeah, so what we've done, we've actually built a tool that's at data.rabbu.com. So data.rabbu, rabbu.com, where what we do is we're a technology company. So what we've done is we've built a tool that goes into the marketplaces that are utilized for short-term rentals and medium-term rentals, the Airbnbs, the Vrbos, the Zillows, Expedias, and we've started pulling data from those marketplaces on a daily basis to understand what the market occupancy is and then what the market daily rate is. And we've translated that into our tool, where if you tap in an address, if you go to that tool, you tap in an address and a bedroom count, we'll give you an instantaneous overview of how much you should expect to make on a monthly basis, and we'll give you the comps that show you these are the properties that we compared it to get to this estimated revenue number. So we've made it really easy to do so based on data, live data from the marketplaces that are sourced for short-term and medium-term tenants.
Got it. And this tool you can use nationwide, so you can put in any address in the market to see where it fall.
Right now, we only have it running for 13 states. It's the primary states. So it's all of the Southeast, the big states along the West Coast, and some of the big states in the North, the Northeast. And we plan to expand to the rest of the United States. But right now, it's 13 states. And I can share those with you, Jason, after this call. Maybe you can put that in the show notes. But sure. We plan to expand that to all 50 states. But right now, it's the 13 largest states in the country.
Doing this, what has been some of the main ahas you've had from analyzing new properties in these 13 states?
Yeah, really, it's a shift on the investor side, even on the institutional investor side, that they realize that this is a demand that is likely to stick around after COVID. And so we've seen a lot of institutional groups come to us and say, hey, we believe that this is a trend that we want to start account for going forward. We believe that a resident will want to have more flexibility in the leases that they sign, whether they only sign a lease for a few months at a time, or they have the ability to do what's called home sharing, basically the ability to sign a 1-year lease and then give them the flexibility to go travel elsewhere for a couple months where they rent their home out as short-term rentals while they're gone. So we're seeing a much more kind of adoption of this new, what we call an asset class, right? A new asset class, a more flexible asset class, a flexible rental asset class. So that's been really interesting for us to see, is that the institutional groups are starting to see this trend. Obviously, the kind of more nimble, smaller investor groups are the ones leading charge here, but the institutions are starting to realize it. And we believe this is something that's going to become a much larger undertaking and much more normalized going forward.
I've actually seen a lot of debt options start opening up for this as well, where before there was very limited options, right? And so I'm very curious. I've seen a couple things pop up. Have you heard of Picasso that started that they're, what was your take on Picasso and the way they're doing it?
I love it. I mean, I think their model is genius. It's really a combination of fractional ownership and of utilizing short-term rentals to drive yield. It's great. And there's been multiple companies that are starting to do variations of this. RealPage is making some investment into something like this, into this space. Brookfield is looking into it hard. So there's a lot of demand shift. And the other big kind of shift that we've seen, and I'm sure you've talked about this a little bit, Jason, you've seen it yourself, is the hotelification trend, where investors will buy a distressed hotel and convert it into a micro apartment multifamily complex, and then utilize that multifamily complex as a mixture of short, medium, and long-term stays to drive revenue, because hotels are now a distressed asset class, unless they're in a Miami Beach or something where there's demand for travel. But traditional hotels are a distressed asset class, so they're being converted into these flexible assets through micro apartments. So that's been another really interesting kind of take that we've seen over the last few months, especially.
Does that change a need for a change of zoning for usual hotel use in most areas?
Yeah, so I mean, I think that's what these groups are trying to take advantage of, because of the hotel zoning that's already in place for hotels. They do allow for short-term rentals without any true issues. So I do think there's some zoning variance that needs to take place as well, but they are zoned for the primary use case, which is transient stays, the short-term rental stays, because of the zoning, the hotel zoning. So it allows some flexibility, and that's been really interesting. We've also seen some groups just buy, we have one partner of ours that bought a halfway house and is converting that into a Airbnb apartment. So it's really allowed people to get creative in their asset and really unlock additional yield that they traditionally wouldn't be able to with just the long-term yield.
Very interesting. Where do you see 2021 continuing to go?
I think we're going to see more of this adoption. I think the travel demand is picking up. I saw a stat a few days ago where February of this year had the highest single monthly booking rate of new travel dates in the history. So it was up 40% than any other previous February in the number of new reservations, bookings made for travel. Now, not in people staying in properties yet, but making reservations to stay in the future. So I think 2021, by, I'm guessing, July 4th, the floodgates are going to open for travel. And this type of asset is really going to be able to capitalize on the opportunity that it missed out over the last 12 months. And I think it's going to be a fun summer in that respect. But I think past 2021, I think that's going to be more of a standardized way of the way people live and travel in these in short-term and mid-term rentals.
Emir, I always enjoy having you on the show, so I appreciate your time today. And it's always interesting to see how different classes stand up to the test, right? And when things come up that are unexpected, how certain classes really faced a different narrative, right? So like we had for retail and still seeing it, of course, office as
absolutely.
But then you look into multifamily, the way short-term rental is going, and there was so much uncertainty, but now it's become, they become really darlings of the real estate world. And so as we continue to see that, there's gonna be a lot of money flowing into it. I'm very excited to see what you're doing. Very excited to see what data at Rabbu.com is going to really provide a really good, useful source for people to get out there and really just take action, which is great.
Yeah, and that's our goal with the tool, is really to educate investors on the opportunity of this new asset class. It's not that I'm going to call it necessarily a new asset class, but it's the standardization of and creation of this new asset class. Short-term rentals and vacation rentals have been around for a while, but I think the potential of it hasn't truly been captured yet, because it's a little bit more of a operationally intensive process, and they're harder to underwrite. The units are, and that's what we're trying to solve for with this tool. We want to educate the market on the opportunity of this asset type.
I love it. Well, Emir, thank you again for coming back on. It's always good to see you. Congrats on all the success. Congrats on everything you're doing here, man. It's been looking forward to the fourth time when I see the next change of a positive narrative going there in the short-term rental space. So for everyone who hasn't, of course, we'll put in the show notes prior episodes, but best way to reach out to you?
Yeah, they can reach out to me directly. I'm an open book when it comes to this stuff. I love it. My email is Emir, EMIR, @Rabbu.com. Please feel free to reach out anytime. I love talking about this stuff. It's my goal to educate investors on this opportunity set, and I'm really passionate about it. So always happy to answer any questions.
And I think you're an inbox zero person. Is that I remember?
That's right. That's exactly right. That's exactly right. So I love it.
God bless you. All right, Emir. Thank you so much again for coming on the show. For all the listeners there, think about all the different opportunities you can do with your properties. When you find value, you can really increase your value doing a tremendous amount of things. We talked about short-term, but now midterm, right? A whole different perspective of how you can treat your rental and how you can really help the customer, which is really how we all benefit, right? So Emir, thank you again for being on the show. Thank you to all the listeners. We'll talk to you shortly.